Hi guys, and welcome to this WCX video. I'm your CEO, Amatsu. In this video, I'm going to walk you through the concepts of leverage, margin, and liquidation price. I've been getting a lot of questions from you guys about this. If you're coming from a crypto exchange, you've been trading spot markets, most of you may not be familiar with these concepts. If you've never traded on margin or traded derivatives, then this video could be useful to kind of explain and introduce you to these concepts of margin trading. Let's dive right in. This is the WCX dashboard. I'm gonna actually select the dark theme here for this video. And if you're familiar, you've used this before, you know that the chart here is in the middle, the markets are on the right, you have your active positions that appear here, and the new trade panel, which we'll be focusing on in this position that you're gonna use to submit new trades. So to enter a new trade, you want to enter an amount. That's the first thing you want to start with. So on WCX, everything is processed in Bitcoin. So all amounts are in Bitcoin. The amounts that you're going to enter are going to be in Bitcoin. You can select another currency, another display currency to kind of help you with the amounts that you want to enter. So for example, you can enter $10,000, but in the back end, everything is processed in Bitcoin. So it's good to keep that in mind. For this video, we're just going to stick with Bitcoin and say we want to enter a trade of 10 Bitcoin position size. The amount here that you enter is the total amount of the position, including leverage. So when you enter 10 Bitcoin here at 20 times leverage, the real balance you're actually going to use is your margin. It's going to be 0.5 Bitcoin. That's 10 divided by 20, right? And if you select less leverage, let's say we only want to use 10 times leverage, you'll see that the margin has been updated to 1 Bitcoin. Which makes sense. The more leverage that you use, the less real balance you need to use in your position, right? And the more leverage that you use, then the less leverage that you use, then the more margin that you're going to need to back this position. We can also trade without leverage by selecting 1 times leverage, and you'll see that this position will be made up entirely by real balance, right? By our margin is 10 Bitcoin, which is the 10 Bitcoin amount for our position. For now, let's just stick to 20 times leverage. And so a lot of you have asked me, okay, leverage, I see this number here on the right, but what is concretely leverage? Like, how does it affect my position? So you can think of leverage as simply a multiplier, an amplifier. It amplifies your buying power. So we see here at 20 times leverage, we have about 500 Bitcoin buying power. The way we get this is by multiplying the balance. So 25 times 20 gives us around this buying power here. And leverage also multiplies your profits and losses. So let me give you an example on the chart here. So imagine we're at 20 times leverage and we submit a long position. So expect the market to go up, and the market does go up by, let's say, 2%, right? So let me represent this with an arrow. The market going up by 2%. There you go. So the amount of profit you're going to make is going to be 2% times whatever your position size is. In this case, it's 2% times 10, which is 0.2 Bitcoin. So how does leverage enter into this? Well, you remember that in this position, you only invested 0.5 Bitcoin. You didn't invest 10 Bitcoin. The real balance is just 0.5 Bitcoin. So when you make 2% times 10, which is 0.2 Bitcoin on this position, you're actually making 0.2 Bitcoin of your margin, like on 0.5 Bitcoin. So that's a pretty big profit percentage-wise. It actually is 0.2 divided by 0.5, which is 40% profit. And if you want to simply get that percent without going through all the calculations, all you need to do is multiply the percent move of the market. So in this case, 2% times the leverage of 20. So 20 times 2% is indeed equal to 40%. So that's really the profit you're making thanks to leverage on just 0.5 Bitcoin. So you want to keep that in mind. And keep in mind that leverage is, it works both ways. So it's a double-edged sword. So if you, for example, go long here and you're expecting the market to go up, but actually the market drops by 2%, like this, well, you're going to lose 0.2 Bitcoin, 2% times the amount here. So it's a double-edged sword, and you want to use it accordingly. And so that's really the relationship between leverage and profit, and leverage and margin. Next, let's talk about liquidation price and how that's related to leverage and margin. So let me illustrate this with an example. I think it will be easiest. As you know, all positions, or when you submit a position at 20 times leverage, it's a leveraged position. That means it has a liquidation price. It's a price at which the position has to be automatically closed to kind of cover the real balance that's associated to this position. So let's imagine you submit a long position here. So you expect the price to go up. And what happens is, unfortunately, price drops. And price drops pretty severely, drops down around, let's say, 6%. So how much loss are we going to make on this position? So we multiply the 6% by the total amount of the position. That's 10 Bitcoin. 6% times 10 Bitcoin is 0.6 Bitcoin. So we'd be making a loss of 0.6 Bitcoin. But if we look at this position, we see that the real balance that's tied to it, that's backing up this position, is just 0.5 Bitcoin. So it doesn't really make sense that we can make a 0.6 Bitcoin loss. And particularly on WCX, which uses an isolated margin system, that's what we call these things, that means the maximum loss possible on a position that you submit is going to be your margin. You can't lose more than 0.5 Bitcoin on your position. So when the market goes against you and you're in a loss, this position isn't gonna pull more balance from your total balance or affect any other position. It's a complete black box, and the maximum amount you can lose is 0.5 Bitcoin. So if the market drops by 6%, you'd be losing 0.6 Bitcoin. Doesn't make sense. So what happens is the position is automatically closed when your margin, when the loss on the position is approximately equal to your margin, or getting close at least. And on WCX, when your position loses 80% of its margin, it's going to be automatically closed. It's going to be liquidated. So the liquidation price is the level at which your position loses 80% of its margin. In this case, if the market drops by 4% and you're long, 4% times 20 is 80%. So this is the level at which approximately liquidation would occur. And you can always check the liquidation price on every position by just clicking on the position and checking the liquidation price here in the panel. And more simply, you can keep track of your profit and loss percent here. And if it gets close to minus 80%, then you know that liquidation is close. So that's it for this video about leverage, margin, and liquidation price. If you have any questions, reach out to our support team and we'll get back to you as soon as we can. And leave us your feedback on Twitter, Telegram, and email. We love to read it. Thank you for watching.